Hello to all traders and welcome back to another non-farm payroll engagement brought to you by myself, David Kinley, and this is on behalf of Orbex. So thank you very much for joining me. We'll get right into the charts and everything shortly. Just want to go through a brief introduction on what we're going to be looking at today. Obviously, where the dollar and gold are going to go, two big trading instruments that a lot of our traders love to see the future path on. We're joined by Daniel as well, my special guest, who's going to be taking us through a few of the fundamentals and technicals, looking at the inflation data, interest rates, and obviously the non-farm payroll numbers as they come. But before we start, let's just have a quick risk disclaimer before we get into anything, just to see whether we're protected from everything in the market. And obviously foreign exchange and all investment trading in CFDs can be highly speculative and result in losses as well as profits. Foreign exchange and derivative trade is not suitable for everyone, so only risk capital should be applied. It's quite important. This webinar is provided for information purpose only, and no information contained here constitutes a solicitation for the purpose or purchase of any certain commodity, security investment, and nor should serve as a basis for investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or any supplied. So, as it is information purpose only, feel free to contact us with our chat as well. We'll be taking questions as we go, so feel free to let me know what you're trading on, where you think everything's going to be going, and obviously where we're going to be looking at next, especially for the Fed. So let's just take a look at what we've seen so far. Once again, thank you very much for joining me, and as I said, if you've got any questions, please let me know and we'll go through them together. So the non-farm payrolls last time around was 216,000 new jobs being added, and the consensus is only 180,000. So a little bit of a drop in that degree. However, unemployment rate is also looking to just tick up a little bit at 3.8%. So if we look on the previous data, we've had a few jumps and misses on the data as well. Obviously, if we go back to this time last year, we had quite big job numbers due to the holiday season in America. So this is something that we'll be looking at this time around as well. Obviously, it's January's job data that we're looking at. And, that last time around, we had just under 200,000, then just over 200,000. So it'll be interesting to see if we're going to have that kind of movement again, a little bit more of an uptick, and what would that mean for the US economy. So as I said, this week we've had FOMC data, the Fed keeping in line with the 5.25 to 5.5%. It remains fixed at its highest level in more than 22 years, actually 23 years now. But annual inflation last time around just jumped slightly higher year on year to 3.4%. So this is something the Fed is probably looking at to see if there's going to be any kind of rate cut in the next meeting. Probably not. Most probably we're going to have a rate cut in the second half of the year. So this is something we're going to most probably start looking at as well. So as I said, we're just taking some questions as well, and we'll get right into the chart shortly. So yes, I'm not going to bother too much and waste too much time on the PowerPoint presentation. Just want to have a quick look at the figures and data before we get into the charts to see what you're trading on. So feel free to let me know what you're looking at, what you're trading on, and where you think the good opportunities will be. So as I said, the Fed remains fixed at staying higher for longer. Most probably we're going to have a rate cut in the second half of the year. The next meeting in March probably won't have a rate cut then. So that's going to be quite disappointing for a lot of traders. But like I said, when we got right down to 3% in June, this was from 9.1%, a 40-year high the previous summertime in 2022. It was quite a remarkable decline. However, we've seen a slight uptick, which the Fed does not like, 3.7% on 2 months. And then we just had slight movement back down to 3%, but now we've had a jump back up to 3.4%. So it's not looking too good for a rate cut anytime soon. So let's get right into the charts now. And as I said, let me know what you're trading on, and if you want me to look at any particular markets. I've just opened up the main instruments that we usually look at, but obviously we can look at other ones as well, because I just want to get right into where we're looking at the moment. So gold, first of all. Gold, what can we say about that? We'll go on the 4-hour chart just to start off with, because with gold, we did have this kind of support just above the 2000 area. So we were expecting quite a bullish run for the yellow metal, but as you can see here, it's come with a firm almost triple top here. If we just take out this small false spike here, we've gone tested 1, 2, 3 times. Now we're going up for another slight run. And it could be a case of, if we do break this particular area just above the 2060 region, we could have more of an upswing, and I'll be looking at most probably the next levels, which will be the last swing high that we saw just under 2090. This, for me, to be honest, is a bit of a false break to the upside here. It was quite a big swing. I'm looking at the full body candles, which match this as well. So this is a nice firm double top for me. So if we do break this particular level, it's 2062, then I would expect a run for another $25 to the upside towards the 2090 area. So this is what I'll be looking at in particular. If we do start sliding lower, I don't believe we're going to break through the 2000 area. This is a very strong psychological support, and it's looking likely that we will have possibly more of an upswing rather than a downswing. However, the non-farm payrolls could give us more selection and more of a direction for the next week at least. So yeah, let me know your thoughts on that. As I said, the levels are looking very good. The trends are looking very good at the moment, in a bit of a bullish run. Looking likely that from the bounce at 2000, we've moved up $50-$60 on gold, with the political tensions that have been happening, and also the fact that every time there's uncertainty in the world, traders flock to the safe haven that is gold. We are looking likely that we will probably see another run on the yellow metal, which is gold. So we are seeing now possibly price action just starting to creep up. We go on the 1 hour chart, or let's even go 30 minutes actually. We're seeing a nice heavy consolidation. Well, we saw this big run from 2030 to 2060 approximately. So $30 to the upside yesterday, but now we're seeing heavy consolidation. So we're just waiting for the next signal to the upside or downside. But like I said, for me, most probably we're going to have another test here if we do have an upswing. But price action is not looking to drop below 2000 anytime soon. So obviously, if we do drop below 2000, then it will open up. Let's go on the daily chart. It will open up quite a lot of levels because it wasn't so long ago that we were trading just above 1800. That was at the beginning of October, and obviously, unfortunately, the conflict in the Middle East began, and we have seen quite a big run to the upside, which was natural. Every time there is geopolitical uncertainty, I couldn't get that out of my mouth. Every time there is geopolitical uncertainty in the world, obviously you'll see quite a big move on gold. We had it with the pandemic when it started. We had it with the Ukraine-Russia conflict, and now we're having it this time around. So this is what we're looking at in the near term, at least. So like I said, I think gold will probably stay heightened, probably stay quite elevated for now, especially after this very big bull run that we've seen. But we'll see what will happen in the near term as well. So let me know your thoughts on that if you have any. Just going to move on to euro dollar now, because euro dollar, just going on the 4 hour chart, has been very, very under pressure. We've seen such a strong dollar in the last few trading sessions, and we're looking likely now that this could even continue. Depending if we do get quite a nice move on the NFP numbers as well. Obviously, I had a bit of an uptick. If we look on how many pips since the last swing low, just over 100 pips in a couple of days. So that's quite a nice upswing, because as you can see, the trends are following here: 100 pips to the upside, 100 pips to the downside, and now another 100 pips upside. Could we expect another 100 pips to the downside? Well, if we do get possibly a break below the 108 area, which is roughly just around 70 to 80 pips away, then we could have quite a big move to the downside as well. So this is what we're looking at for the euro dollar. It's looking likely that we could have possibly more of a choppy descending channel continue, because if we go on the daily chart, as you can see here, we did get a push up to the 111 area, but that has given us very, very heavy support, because there was supposedly going to be a V-shaped recovery from the last upswing, which was the mid 112 handle. But as you can see here, when price action did start recovering, we saw a move back, which was supposed to go up to here, nice V-shaped recovery, but it just faltered about 100 pips before that, below that, and now we're in a bit of a bearish run. So this is what we're looking at in the near term at least, and where we might see more of a signal in that direction. So very, very strong dollar in the last couple of trading sessions, and it's really been reflected across the board, because if we look on pound dollar as well, if we bring it back to the daily chart as well, we've seen this vast downturn. Again, this V-shaped recovery that we saw on the, well, attempted on the euro dollar was kind of in progress. But as you can see here, it faltered, it failed at this particular area, roughly where it is now. And now we're in pretty much a sideways consolidation area. So this is what I'll be seeing in the near term if we're going to break out of this choppy sideways action. For me, if we break the 128 handle, which is roughly about here, just the top end of that sideways channel here, then we could see another move back up to the 130 area. But because we're seeing quite a lot of dollar strength across the board, it's unlikely at the moment that we will see 130. But obviously, stranger things have happened. We have seen quite a big swing in the markets in the last couple of trading sessions. So this is what we're looking at the moment. So it could happen, you know. Just sticking with the American theme at the moment, I'm pretty sure you've seen that earnings season has really started to be underway, and it's really driving not only the Dow, but the S&P 500 and the NASDAQ higher and higher. We've had NASDAQ, which has hit record highs. We've had Microsoft, which is one of the big players in all three indices, that has seen a movement so vast. It's the second company behind Apple to hit $3 trillion market cap. So this is why we're seeing quite a big run, a bull run on the three major indices. So if we just bring it back to the, let's go daily chart. I just want to show you how momentous this drive has been. You know, we're hitting 4,900 for the first time, just trading over that at the moment. On the Dow as well, go to the daily chart. Again, we're seeing this V-shaped recovery being eclipsed because we're seeing now that it's just gonna, it's taken a mind of its own now. We're just completely, from the last swing high that we've seen here, just above the 35,000 area, it's gone completely into orbit, let's say, and it's really starting to look good for the American indices. So with a presidential election year coming up as well, what will this mean for the economy? Will there be any twists and turns as well as we enter the next phase of the either Joe Biden era or the Donald Trump era? So it'll be very interesting in November if we see a new president. What will that mean for the markets as well? So quickly going on to dollar CAD, as I said, the chat is open. If you have any questions and you need to just talk about where any of the markets may be going, we can obviously catch up then. So dollar CAD, also known as the loonie, this has seen a bit of a downturn actually compared to the dollar. So we have had a little bit of dollar weakness in this particular excuse me, instrument. And as you can see, a bit of a downturn there, losing just over 200 pips in the process from a couple of weeks ago. So quite a big run for bears. So where do we see the loonie going? Well, naturally, I'm just waiting to see if this bearish channel will be extended slightly. And I'll be seeing if there's going to be a bounce roughly at the mid 133 handle. So that will mean that, and possibly just another 40 to 50 pips to the downside would maybe see a bounce. So I'll just be looking to see if we're going to have more of a push to the downside, and then we're going to start moving a bit higher as well. So that's going to be something that we're looking at in the near term as well. So a lot of exciting instruments and forex pairs to trade on and to look at. Obviously, as the NFP approaches, there's a lot more of an interest in a lot of the big forex pairs as well. But we try and bring you all the big commodities and the indices as well that could be affected. So looking at dollar yen as well, had a lot of people asking me about dollar yen in the last few days. A lot of our clients trading on this currency pair because they're looking to see if the yen is going to be coming back. And from the look on the charts, it looks to be the case at the moment. So we have had quite a big downswing. Let's go on the 4-hour chart because, since this progression on the dollar, we're now seeing a bit like the Canadian dollar chart that we are in a bit of a bearish run, meaning that price action will start possibly ticking higher if we do see a slight correction. So we're just seeing now if that's going to go a little bit higher and if that's going to have any test on this particular channel here. It'll be interesting to see if this can be taken a bit more to the upside, roughly about 50 pips in that sense. So very, very exciting. So we're just under 15 minutes away from the NFP. Let's just double check if we've got any updates on the amount of new jobs coming in. So the consensus is still 180,000 versus 216,000. So this is something what we're looking at the moment. So thank you for your question. Yes, can we please have a look at the NASDAQ 100? Sure. We were just looking at the moment at the Dow and the S&P, the NASDAQ as well. For me, a little bit pretty much like the Dow. We will run from the last swing high. We had a bit of a bearish turn, but since then it's just been progression after progression, record high after record high. The NASDAQ, the Microsoft is making up quite a lot of the percentage of the NASDAQs. This is why we're getting such a big movement. Most of the big players in the American stocks for the earnings have been exceeding expectations for their earnings. So this is why we're having such a big move on the market. So with that being said, we are waiting for the next correction. But if we just zoom in a bit more, as you can see here, a lot of traders thought this was the correction, but now we see a bounce, a full V-shaped recovery here on this small amount here, small bounce, and then a break at this particular area just below 17,000, and then another push higher. So is this pattern here going to be the same as this one? We're going to have just a small correction, and then a bounce, and then a move higher, and then another big move higher back to another record high. We'll have to wait and see, obviously. But the way the earnings seasons are going recently, it has been looking very, very good. I've just been joined by Daniel, so I'll just put my headset on. Hi, Daniel, can you hear me?
Hey, yeah, seems to be working.
Yes, great. Good to see you again. Good to hear from you. We're just actually going through the three major indices, NASDAQ, the Dow, and the S&P, and how they're hitting record high after record high. And
yeah, even with the Fed.
Even with the Fed, yes. And you could say it's pretty much to do with the big players like Microsoft's earnings season. They've hit the $3 trillion market cap, just like Apple have done. And, are these big companies pushing the indices during this earnings season?
Yeah, it seems like the Magnificent Seven keeps staying magnificent. So
It does,
at least
yes.
for now. Though, of course, we don't know. Well, with the earnings, with the interest rates coming down, it seems to be keeping them helping them. And
Yes.
they also haven't been hit by the layoffs that there's been going through the tech sector. Like PayPal has had some problems. Google, the results weren't as good as say, for example, Microsoft, and Amazon did really well, of course, because of the AI. The AI still seems to be pushing everything. I don't know when that's going to run out, but
I was going to say that. Yeah. Sorry to interrupt you. I was going to say that because the AI thing was, a lot of people thought it was going to be like a .com bubble where it would eventually run out of steam. But I think AI is here to stay, isn't it? I mean, it is the future. We're not going to go back to,
most likely,
reading newspapers rather than, looking at things on the internet. I mean, it's not a backward cycle with AI. It's only going to be a progression.
Yeah, I mean, also the .com thing was also kind of similar. Like the internet didn't go away; you just had sort of like this big boom at the beginning, and then and also it lasted more than a year. Like the .com thing really started in 98-ish, and it didn't collapse until like 2001 sort of thing. So
Yeah.
you had a pretty good run, and so probably something similar with AI, but like keep pushing up certain companies like 200% stock. Their stock went up 200% year after year might be a little bit more challenging. I would expect it to sort
Of
of
course.
broaden out a bit. There might be more companies that get into the cloud storage space, and it's not like Amazon, I think, is 47% of the cloud storage market. So of course they're
Mhm.
doing well, but if you have this exponential growth in cloud storage, well, it doesn't cost all that much to build a rack of servers yourself and have, well, I mean, for me, yeah, like as a common person, you and me, it would be kind of hard, but like for another billion-dollar company to put in a server rack and then start offering cloud services, it wouldn't be all that expensive. So I'd expect it to start broadening out, and then that would presumably lead to like a more broader growth, like, so right now it seems like really narrow. Like last year the stock markets have gone up substantially, but if
Mm.
you cut out those magnificent seven, the actual index went down because it isn't really very broad based growth. It's just sort of like those companies have grown so much and
Yeah.
they have such a large weighting in the indices that they're dragging the index up, whereas everyone else is sort of like and not doing so well. So in order for it to
Exactly.
be sustainable, we kind of hope that other companies can get in on the AI thing too.
Yeah. I mean, we can't leave the NFP without just touching on the Fed, because it was this week
Ooh,
that
right?
they
Yeah.
decided to hold again, but it was pretty much priced in, wasn't it? I don't think we could have expected a rate decrease or a rate cut
Yeah, that would be.
so early in the year, right?
Yeah. Uh, but the market is doing its usual thing of getting a little bit ahead of itself. Like,
Yeah.
so, it kind of like the Fed did what it said it was going to do. And then there's
Mm.
sort of a whole bunch of people, well, not a whole bunch of people, but there's a large number of traders who are a little bit surprised that the Fed did it. And so
Mm.
that's where they were pricing in a rate cut as early as March, and Powell essentially had to say, "No, we're not going to do it in
Yeah.
March." And so then you had that change, but it was sort of really kind of not like a seriously priced in because we saw the market went down in the immediate aftermath
Yeah.
and then bounced quite back up. So it's sort of like, yeah, it's in line. Maybe some people got a little bit over enthusiastic and started selling bonds a little bit too soon.
Yeah.
But then just be a little bit more patient, kind of thing.
Exactly. But I think that the way it's going, probably we won't see a rate cut in this first half of the year. I mean, it's looking more likely the
Yeah,
second half, because the Fed has come such a long way to try and bring inflation lower. And it's still kind of creeping up a tiny bit
yeah,
sometimes, that
exactly.
they don't want to run before they can walk. And I guess they're probably thinking of the long-term benefits of, oh, if we cut too quickly, then, people might get excited, and like you said, the market might get
Yeah.
ahead of itself, and then all of a sudden inflation's back up to 6%. So
Yeah, exactly. And the other thing is, if the economy is still doing pretty well, they don't have any reason to like unless you have a really terrible NFP, they not have any necessary urgency to start cutting, because I mean
yeah.
the real urgency would come in if the economy isn't doing so well. And the other thing is, the Treasury isn't going to be selling as many bonds this year. They sort of front loaded their bond buying. So last year they sold a whole bunch of bonds, and so this year, coincidentally, it's an election year. They don't have to
Yeah.
do as much borrowing, so that'll also help bring down interest rates. So even if the Fed were inclined to cut, the lower amount of bonds coming to the market, that would keep the interest rates down low on their own. So
Yeah.
then the Fed can just sort of like sit there and wait for the Treasury to do the work for them. Kind of
Mhm.
like how last year they could just sit there and wait for the Treasury to do the work for them when the Treasury is selling all those bonds and pushing up the interest
Yeah.
rate.
Yeah, exactly. I mean, I was going to, you just touched on it then, with the an election year coming in. Is this going to, I mean, the thing is, if Donald Trump does come into office, we know what to expect because he's been president before.
Yeah.
And obviously, if Biden does stick around, then we know what to expect with him. Would the market react so volatile if one or the other does get in? Obviously, one of
Yeah,
them is
that's
going
the
to
thing.
get in, but
Yeah.
we are going to, will we see such a big reaction from the market, or it'll just be, business as usual?
Yeah, I mean, you did really point out the crux of the thing is that it's already priced in, but there is a little bit of like change in where their emphasis is going to be. So, we presumably Biden would continue to go on the more green energy kind of stuff,
Yeah.
whereas Trump would go on to the more fossil fuel kind of stuff. So you might see like a move there in the shift of, in priorities,
Mhm.
but like an overall large market move like you had when Trump surprisingly won the election, probably not so much. But then of course that was partially or large portion of it was driven by him coming out and announcing a $1 trillion infrastructure package on the night that he won the election, and so everyone was
Yes.
like, "Boink!"
Yeah. We saw
So
a bit of a spike that day.
yeah. So that's the thing about Trump. Well, with Biden, it's a lot more predictable. With Trump, you really, you really don't know what he's going to come out and suddenly announce. So he might
Yeah.
be on. He might go and do something similar to that. But after like the last, well, almost four. At that point, it'll be 4 years of these $1 trillion packages coming through. It might not be so welcomed by the market because it's going to
Yeah.
imply, debt going up again, and it's also going to imply more inflation. So it might have a different reaction if he goes through
Yeah.
with that, or something else might happen. But
Exactly. So we've just got under 4 minutes to go before the NFP. There is expected to be a little bit of a downturn in jobs data. So last time around, it's 216,000 new jobs added. This time around, it's 180. But 180 is still a decent figure, isn't it? If we go
yeah,
into what you
yeah,
could say, post-pandemic and everything.
yeah. If you go back to the before the everything got messed up with the pandemic, like between 180 and 200 was sort of like normal. If it came in
Yes, exactly.
below, came in near that range, it was sort of like, yep, we're doing good. So if it came in that same amount, it would probably just keep everything as is.
Yeah.
And with what the Fed did, with the expectations around the Fed,
Mhm.
and for the dollar and for the market. So since the dollar's been sort of like ticking lower and the stock markets have been going up, probably would, if it keeps in within those expectations, it would keep those trends going. But also it's the end of the year or the new year, in terms of they're going to be putting out the January figures, and so it's going to be an adjustment for the
Exactly.
prior year figure, and so that
Yeah.
could lead to a little bit of an outsider, because if you remember last year for January we had that big surprise was 400 and something thousand, I think it
It
was.
was a big jump, yes.
Yeah, and so there is a chance of that happening again,
Mhm.
but well, I guess we'll find out in a couple of minutes.
We'll find out in a couple of minutes, yeah. But like
Yeah,
you said, it's not such a big problem if it does come in at 180,000. I mean, it's still a
yeah.
decent run, and the Fed will still be looking more positively than negatively about where the economy is going for the next few months.
Yeah, I guess I mean what the Fed's really worried about more than the absolute number, but it does feed into it, is where the average wages are going, because
Yeah,
that's going to really push inflation. So if you'd have to probably get a pretty large miss of our expectations, so like maybe below 100,000 or above say 300,000, to
yeah,
really push expectations. But and the market is a little bit fickle right now, and it's the kind of
it
with
is.
you can see there's a little bit of sensitivity
Mm,
based on what happened with the Fed, that where it went down and then it went right back up, and so it's, I guess the market's a little bit sensitive. That's all.
exactly. So just got over just 1 minute to go. Just want to quickly pick your brains on gold, because a lot of our traders they look at gold as being such an opportunistic instrument, and we had a bit of a bull run in the last few sessions where we
Hmm.
saw where the price is now, really roughly about 2060. But we've had a little bit of you could say it's a bit of a triple top coming in here, just testing, testing, and testing again. But do you see, with the geopolitical uncertainties that are ongoing, another big bull run for gold?
Well, so far, is if the dollar keeps going down and you still have all the geopolitical tensions, as you mentioned, going on, then
Yeah.
the tendency would still be there. I guess a little bit of that topic had to do partially with the Fed, because you had those 4 days of going straight up, and then
Mhm.
Thursday hit and went back down with the Fed coming back, and then you had the dollar weakening a little bit. So it seems
Yeah.
to be working within the function of the dollar, and so everything's kind of pointing to this year that the yields are going to be going down, either because the Fed is going to be cutting or because the Treasury is going to be reducing and such. So that would generally push the price of gold up. Aside from all the other factors that are going on there, especially like if earnings do well, if the economy is doing well, and also China, the other, because they're the largest buyer,
Yeah,
and the
true.
PBOC still seems to be buying even regardless of how the economy is doing. So that also seems to be pushing gold in a favorable direction.
It does, yeah. So we've just got just a few moments before the NFP figures are released. We've seen a bit of quite a big spike now. So, oh wow, 353,000.
Above 300,000. Yeah.
Yeah, new
Like I said,
jobs added.
there was a chance of the surprise.
There's a chance it's surprising, yes. So, okay, so nearly over 150,000 more than what was expected. So we could see a little bit of a progressive dollar in the charts at the
Yeah.
moment, which is what we're seeing now. We see gold falling. We see the forex pairs in favor of the dollar really moving quite dramatically as well. So we'll just pick up on the euro dollar first of all. That's actually just moved just over 40 pips so far. So quite a big move there. Unemployment rate has stayed the same at 3.7%. That was supposedly going to uptick to 3.8%. So that's quite a good number as well. And average hourly earnings just creeping a little bit higher as well. Participation rates just a little bit, 10th of percent higher. So all around at the moment, looking quite favorable for the dollar, you could say.
Yeah, it definitely seems like it. The thing there is, as you mentioned there in passing, is the average hourly earnings. It went up.
Yeah.
Well, I think you're looking at the right. Did you mention the monthly or the annual? I forget which one you mentioned.
I'm looking at both, but I think both of them are just upticking a little bit than the
Yeah,
last time around.
yeah. The probably, I guess people are going to focus more on the monthly because it's the soonest one, and it was
Yeah,
expected at 3%. It came 0.3%. It came in at 0.6%, and I think
yeah,
that's probably one of the bigger things there because that means you have inflationary pressures because people are making more money and they're going to go out and spend it,
yeah,
and so that might incline the Fed to keep rates higher. I think the current consensus is they're pricing in May, so that might push it forward to like June. If you
right.
push it forward 1 month, you could see the dollar gain substantially. And the other question is, as usual, when you have these things, is it going to fade? Because you get the initial reaction and then you get the corrections of the prior month and adjustments. But I don't see superficially anything like the prior month wasn't revised
Yeah,
significantly lower or anything like that. So it seems like it's, I mean, it could of course fade, but it seems pretty more solid,
yeah,
unless there's
yeah.
something I'm missing.
I was going to say that there's not many retracements in the market at the moment. It's small retracements, but not like a full 100% retracement at the moment. But
Yeah.
okay, we've only had 2 minutes post NFP data just to digest for the markets to digest. But it's looking, it's looking okay for the dollar. Obviously, the indices will slide a little bit.
Yeah,
You
because
know,
then they're going to be thinking, you know, no help from the Fed.
no more stimulus and yeah, no more help.
Yeah,
So we'll we might
or
be
less
shocked
help
a
from the
little
Fed,
bit.
shall we say?
Less help, yeah, exactly. They'll let the earnings season keep boosting the indices for now. Um, so is the earnings season coming to a close now, Daniel? Is it that most of the major players have been and
Yeah,
gone?
about half of them have gone through. Well, as of today, I think it was like 50, a little bit over 50%. So you get,
Yeah,
but the other thing is usually the ones that aren't doing so well, they kind of at the end, and the ones that are doing better, they're more eager to jump in. But yet so
right.
far, I guess you could say this week and next week are the peak of earnings season.
Yeah.
Next week still have some pretty big names. You have Alibaba coming out,
Mhm.
and off the top of my head, I can't remember the other ones. McDonald's. McDonald's is kind of an important bellwether of where the economy is going. So I guess a lot of people are going to be focusing on that one on Monday.
Yes, definitely. Yeah.
But so far, it's kind of been like a bit of a mixed bag so far because you had several of them that are doing pretty well, beating expectations. But then, of course,
Mhm.
you had these odd ones that pop in. So like most of the tech ones are doing good. Meta did pretty well. Amazon did pretty well, and then amongst them you have Google, who didn't do very well.
Yeah.
And also you have the logistic companies have been doing pretty well, Maersk and such. Then you have UPS; they're cutting 12,000 jobs, and so it's like
Yeah.
a generally good thing, but there's like this weird in there that's not doing so well. And so yeah, that would generally keep pushing the market up. And maybe help push it to be a little bit more broader than just not those 7 tech companies, as we're
Of
mentioning at the
course, yeah,
beginning.
because it does kind of get a little bit stagnant and boring if it's just the same 7 companies that are always
Yeah,
going to be, you want to see those surprises or those, little jewels in the dust, or however how the expression goes, that diamonds in the rough, sorry, that
yeah.
you find, and you think, oh, this is a good stock that could have a bit of an uptick, and it make some money for us. So
Yeah,
these are
yeah.
things we
That's
look
the
at.
thing with the Magnificent Seven so far, is that they've gone up so much that you're like,
Yeah.
well, are they really gonna keep going? Should I put money in them? And and so it's like, you'd probably want to get one of the other ones that haven't gone up yet. They have a chance of going up, but that's going
Mhm.
to require a little bit more broadening the market. Maybe we'll see that this year, hopefully,
Yeah,
or maybe
exactly.
we'll see the market go the other direction, because that's still always a possibility.
Exactly. So, Danny, just in closing, for the remainder of this year, I mean, we are looking more likely of a soft landing. I mean, recession fears have probably gone now, haven't they? I mean, we're
Yeah, pretty much.
more
I mean,
focused on inflation getting back down to possibly, well, 3% first of all, and then possibly to the Fed's target of 2. But I think, the broader spectrum is that the recession fears are pretty much gone, haven't they?
Pretty much. I mean, I haven't really seen all that much commentary about recession. There's like this
Yeah,
a relative odd person pops up and says that there's a recession, like
yeah.
a CEO here and there. But like before, last year was like all the CEOs of the major banks were talking about recession, and
Hmm.
now they're not. And I guess Jamie Dimon was sort of like the pack leader there. He is sort of like an economic hurricane thing, and so now
Yes,
he's hasn't been that. He's been more positive, shall we say? But of course,
exactly.
the problem is that recessions happen when no one expects them.
True, true.
It's, I guess, if you're going to go with the sort of like where the consensus is, pretty strong that the soft landing has been pretty much mostly achieved. And then the question is, when you're going to have the economic rebound, and
Yeah.
that will then depend on, well, why is there going to be an economic rebound? It
Mm.
it would presumably be if you get the interest rates to come down. So that would mean inflation is down enough so that they can bring the interest rates down, and then people can have more ability to borrow money to start spending.
Of
So
course.
that would be probably at the end of the year. So we might have sort of like a little bit period of, assuming the soft landing scenario, you have like this softer area
Hmm.
through, up until maybe the middle of the, well, I guess that would be the end of the third quarter,
Yeah.
conveniently right there for the election, when things would start turning up, people would be feeling more positive.
Yes, definitely. Okay, great, Daniel. Well, thanks for your insight once again with not only the NFP, but obviously ongoing geopolitical factors and inflation, presidencies, and we've probably discussed quite a lot of the topics today to go through. So,
Yeah.
thanks for joining me once again, and it's been a
Well, thanks for
pleasure.
the invite,
No
as usual.
problem, and we'll speak again next time around.
Yeah, have fun and happy trading for everyone.
Thank you very much, Daniel. All right, we'll speak again next time.
Yeah, take care.
Take care. Bye for now.
Bye.
Bye. Okay, so that was Daniel's insight. So just let's go through most of the charts at the moment. So I'll just take this off just so that I can hear a bit better. So euro dollar, it's really been progressive to the downside. Well, the dollar has anyway. I mean, look at this, over 70 pips. We haven't really seen this kind of a move on the NFP in quite a few sessions. So with that being said, even though there was an uptick on the euro dollar recently, it looks like it's pretty much erasing all the gains that it has been making from then. We just take a quick note of where we saw this particular drop and going towards the 108 handle at the moment. So let's just point that out, because this will be quite a significant psychological break at the moment. So only another roughly about 15-20 pips to go before we possibly get that kind of test. So that would be quite interesting. Let me know what instruments and anything that you want to look at if you're trading on something. Very, very good NFP, because it's looking like it's going to be having quite a lot of opportunities. Gold, on the other hand, let's just look on where we're looking at. So we were stuck in this heavy consolidation, and now instead of testing this triple top, we are now sliding back down towards 2000. So 2035 roughly at the moment. We probably, as I said, I don't think we're going to move out of this bullish channel at the moment. For me, it's just a case of if we're going to have more of a downswing below 2030 and then possibly back down to 2000. But a break below 2000 is a little bit out of the question at the moment. However, stranger things have happened. I'll just be keeping an eye on gold for the rest of the today's trading session, because it's possibly can give us quite a lot of good opportunities in that respect as well. So like I said, gold at the moment dropping. Let's just get a good figure on how much it's dropped, just over $20. So again, quite progressive downfall for gold in the NFP session. We haven't seen that in quite a while. So looking very, very good at the moment. Also, let's just look on where else we're looking at the moment. So NASDAQ, we were looking on that before. Curry and Boycanyo were both asking about the NASDAQ. It's looking likely that due to the fact the Fed won't be giving more stimulus or any good help towards the American economy. We've had a bit of a dip. However, we are still probably expecting the NASDAQ and the S&P and the Dow to possibly test these record highs once again. So it's a slight correction at the moment, but probably, you know, looking back down to where we saw the bounce, just over 17,100. You know, we've got roughly about 300 points before we get to that stage, but it's most probably a little bit out of the question that we're going to see this today. If we do, then we could possibly see a test at that particular support, and it'll be interesting to see if that can be broken as well. Let's get right onto the S&P as well, because that's dropped as usual as the NASDAQ and the S&P and the Dow. But again, let's look on the 1 hour chart and just zoom in. So now we're just looking to see how far down we can go. We had a very bullish upswing before this nice consolidation. So we could have hitting this double top. We could have a move back down to the last swing low, roughly just above 4,900, before we have another test, possible bounce to the upside or downside. So this is something we'll be looking at as well. As I said, any questions that you have, please feel free to keep them coming. Very, very excited at the moment, because as I said, we haven't seen this kind of movement in the market for quite a while with the NFP figures. Dollar yen, wow, I mean, look at that bullish candle on the 30-minute chart, moving over 100 pips, which is quite significant as well. And, you know, it's looking likely that there's no retracement at the moment. It's pretty much completing a full bullish candle. Will we get to these particular heights here that we saw, this triple top, just below the 148 handle? We've got roughly about another 10, 15 pips only before we get to that particular level. And it's, as I said, it's very, very interesting movements in the market at the moment. So let me know what you're thinking, because it's looking very progressive for the dollar yen. I mean, wow, look at that bullish candle. Amazing, amazing looking at these markets. Dollar CAD, pretty much like the dollar yen, not as aggressive, however, making good strides in the market. So a lot of these markets have been having this downswing or upswing, and then this very progressive consolidation for a few days. And now we're seeing possibly another move to the upside as well. So roughly at the 134 area in that respect. So that's looking quite progressive as well. Very, very nice. And just lastly on the pound, before we go back on gold, just to see where we're going. So pound, a bit much like the euro dollar, dropping 70 pips. Not really looking likely that it's going to retrace at the moment. We're nearly 15 minutes after the NFP, and let's just see if there's anything's changing here. So I'm just seeing here, over 353,000 new jobs being added, with 180,000 was supposed to be the consensus. So quite a big movement in that direction. Very, very nice movement for the dollar. So just lastly before closing, as I said, I'll keep the chat open for a bit longer. I'll be online if you need any assistance or any questions being answered. Just looking at gold again, so we've had a bit of a test at this lower channel, Now we're seeing a slight retracement. I'll be interested to see if we do break this lower channel here on this bullish run, if we're going to have more of a bearish downswing. However, it's looking likely that gold will probably stay elevated for a little bit longer. But obviously, if you are trading gold, keep an eye out for the rest of the trading session, because it can be very, very opportunistic, and looking likely that we could see more of a downfall on gold if traders do keep pricing in these movements as well. So very, very exciting times there. So that's it for this round of the NFP. Thank you very much for joining me once again. This has been brought to you by Orex. My name is David Kinley, and we're just looking now where we're going to be going next. Where do you think the Fed is going to go in its next meeting in March? How is the run up to the presidential elections going to be? Obviously, there's going to be a lot of fighting talk from now until November. And where do you think inflation will go as it just kind of ticks up a little bit? Are we going to go towards this 2% target from the Fed, or are we going to start moving a little bit higher? And in doing so, will the Fed hold back on its rate cuts? That is pretty much been priced in by the market. So let me know what you think. We'll be around for a little bit longer. So have a great trading day, great weekend ahead, and we'll speak again next time around. Bye for now.